Thanks so much for watching Morning Markets. We've got David Taylor, Corporate Director at PI Financial and former CIO of Taylor Asset Management, joining me on the desk for the next half hour. Great to see you. Do you want to start big picture, markets, what we've seen as the fallout from the Fed and the BOC?
Yeah.
I don't know, are you planning to go to the U.S. anytime soon?
I'm going next week.
Well, I hope you locked in your U.S. dollars.
I have some U.S. dollars squirreled away.
Are you worried about the Canadian dollar at all, given this diverging path between the BOC and?
Well, I guess well, it is what it is. I mean, am I worried? It's suffered. It's done poorly. It's massively underperformed under currencies. But I guess the Bank of Canada is the only bank that's paused hiking interest rates, and they're going to wait like everybody else and look at the data. And that's not to say they can't start up again and the Canadian dollar starts to rise again. But no, the Canadian economy seems to be running slower than the U.S. economy, and they don't see reasons to hike right now. And the U.S. is going the other direction, and it'll be fascinating to see again. I know everybody's talked about it, but the job numbers tomorrow after last month's job numbers in the U.S.
It's true because that, and as much as we hate to put so much pressure on one data point, that better than expected jobs number basically precipitated a month's worth of losses.
Yes, yeah. You know, it's interesting to, you sort of read why higher interest rates in Canada are having more effect on the economy than in the U.S. And a lot has to do with the higher debt levels the consumers have in Canada, and also the shorter duration they have in mortgages as well. So that a higher interest rate or higher mortgage rate seems to have more effect on Canadian homeowners than it does in the U.S. But you're right, it was that one job number. Then there was also another inflation number that came along, and some of the retail numbers were strong. But that's backwards looking. And again, tomorrow's going to be fascinating. Next week's CPI numbers going to be fascinating. Yeah. The wage numbers are going to be great. Going to be fascinating to look at tomorrow.
Are you still picking away? Are you finding some opportunities?
No, I definitely pick away. And I still, the names that I own, I'm still very, very bullish on. And when they dip down, if the market corrects a little bit, then I like to add to them. That's not to say that if fundamentals change, I'll sell. I'm looking at a few new names. Ford is one, Ford Motor in the U.S., which is just massively underperformed, and it's been a dog for so long. But I think its prospects are interesting. They came out with their February sales numbers, which were unbelievable, up 20% year over year. They're clearly building cars that people want. What happened was last year in the second quarter, they announced they're going to split the company into three divisions. Yeah. The commercial division, the standard combustion engine car, and then the electrical side. And the market loved that, and the stock went from $5 to $22. And then they came out and had two horrible quarters in the third and the fourth quarter. Yeah. They kept guidance after a horrible third quarter for the year, and yet they still disappointed, missed guidance. That's a kiss of death. So the stock went from 22 all the way back down to $13.
But you still think the fundamentals
I think it's very interesting. I mean, the total market cap is $50 billion, which is the same as Ferrari right now. Yeah. And I just look at the potential for their EV business to sell 2 million cars, which could be double what Tesla's selling.
Now, people will say that Musk is dragging everybody into a price war. Yeah. And it's a war that Musk can afford because the margins on Tesla are bigger than the margins for Ford or General Motors. And I know you're a big margin guy. Yeah. So does that worry you?
Well, no, I think it's definitely something to look at. I think that one of the reasons I would think that Musk also is dragging margins down is because a year ago, he was the only game in town, right? So it was the only place to buy an EV car was from Tesla. That's not the case anymore. So I think he has to compete with pricing. But I'm not surprised that pricing's come off. I mean, it was really hard to justify buying an EV car unless you buy it for altruistic reasons. But to buy it economically, you have to drive almost 30,000 kilometers a year to make it worthwhile. So to me, I think the pricing has to come down, especially since gas prices have come down as well. Yeah. So none of that surprises me. But when I look at it, I think the next quarter for Ford's going to be good. And I think their sales numbers are off the charts. And I think they're going to launch. And I think when you start to see in the second quarter, in the quarter they're about to announce, when they show a separation of the EV business, people have an idea that they'll be able to value that separate EV business and see what that's worth. That's now currently embedded in Ford. So.
Well, Ford is one of the top customers for Linamar, the auto part maker, which is under pressure right now. Paul Bagnall's been reporting on that story. Paul, we referenced that Linamar has been under pressure on the back of its latest quarterly results. Can you just walk us through some of the problem areas?
Yeah, it's the guidance, it's the outlook for the current quarter, for the first quarter, that appears to be the big issue. And this is really echoing in many ways what we heard from Magna International about a a month ago. It said that its profit margins were going to come under pressure for a variety of reasons. That was a shock to the market, and we saw Magna shares come down about 16% in a single day, and they have not recovered since that fall. I don't think today's outlook from Linamar is as much of a shock. Analysts have reacted in a fairly calm way to the guidance. The market, however, is selling the stock down by as much as 9%. Here is the guidance. The company says first quarter sales will be down meaningfully. It says higher costs will weigh on margins. So there's the margin story again emerging in the auto parts sector. It expects below normal profit margins in the first quarter. It also says, Amber, that the situation is very dynamic, and that's because the war in Ukraine is a real influence here. It has disrupted in a big way the auto parts sector and the supply chains feeding the auto parts sector in Europe, and that's a big part of this. Here's the company's results. Meanwhile, the company missed earnings expectations, but not by a huge margin, only by 4 cents on an expectation of $1.65. And there were big increases in many of the sales numbers at Linamar. You can see them there, 34% on the top line, 25% for the mobility segment, which is the key auto parts segment. But it must be said that those big fat gains over last year's fourth quarter came after a weak fourth quarter last year, where the numbers were actually down from the fourth quarter of 2020. So it's a bit of a moving target there. Here's a look at the stock. As we say, it has been down from the open today. It's one of the main, I think it was the #1 decliner at the open, and now it's down a full 10%.
All right. Thanks so much, Paul, for breaking down those results. We've still got David Taylor on set. I know you look at this sector. We talked about it post-Magna and their shocking warning, but it had held up.
Yes.
Was that a mistake? Would you buy the dips? How do you think about it?
Well, one thing that was interesting what Paul said, but one thing he failed to mention, I saw in the release, was I think they upped their CapEx number for 2023, and I think they've switched from analysts believing they were going to generate free cash flow to them not generate free cash flow. And the other thing I noticed was they didn't reinstall their share buyback. And I think they bought back a significant number of shares last year. And I would have thought typically they would just renew it. And they didn't renew it this year. So I think the combination of obviously missing guidance, forecasting lower numbers, talking about margin compression, but to me, I think why this stock might have held up better than others is because the industrial side did very well. Like the Skyjack side did well, and the aggregate, the business they have that sells the things that go in front of for tillers and plowing and so on, has done very well. In fact, it beat expectations, just not big enough to offset what's going on the auto side. So thank God they have that business, because these numbers would have been worse.
Seen a huge divergence in the performance of these names. Magna basically flat for the year. Linamar 14% for just so far in 2023, and then Martinrea, very different tone for Martinrea when they came out with their results. All roses and sunshine.
I used to be a big shareholder of Martinrea.
Okay.
And in fact, so big that we, a while back, changed the board. We actually got very active and forced to change the board, and that was for the good. But, when I think Martinrea was just so depressed, I mean, they did so poorly for so long that sometimes you just have to, just announce it's a half decent or even just meet guidance, and the stock does well. And you say, the stock's done well, but if you go back historically, it's so chronically underperformed Linamar and Magna. So sure, it's done well, maybe in that time period that you mentioned.
It's just here today.
Maybe it's catch up, but it also was trading at a discount valuation to those others. Yeah.
But if you like Ford, and a lot of these suppliers supply Ford, it doesn't sound like you're willing to double down on that Ford bet by entering the space on any of these names.
No, I would look at anything. I think the valuation is right, but Ford's got a 4% dividend yield. Ford's trading just above book value. Ford's going to earn $1.50 to $1.80, and it's a $13 stock. And Ford's going to generate free cash flow. So Linamar just said they're not going to generate free cash flow, and I can promise you they're not trading at the same multiple that Ford's trading at. But also Ford has EV growth, like significant growth that's going to have a significant impact on their. I just think on the attractiveness of this company as a whole. I'm not sure. And Linamar does have EV growth, but not to the extent that Ford's going to have, I think.
All right, thanks.